The World Health Economic
In two now.
I think we can help transform the way in which companies are run in the U.S. And I think the U.S. GDP is going to be very, they're going to see significant growth. The fundamental limit to Palantir's growth at this point is, can anyone besides America adopt at the rate America's adopting? The fundamental limit for Palantir is, can we keep up with the adoption that you're seeing, especially in U.S. commercial, which is just like, we do not have enough people. We do not have, we have a nascent sales force. We're doing our best. We have all these companies now are training on installing Palantir. They're getting up and running. We're doing our best.
That was just last week, our interview with Palantir CEO Alex Karp here at the New York Stock Exchange, when I asked him how big the company can ultimately get. You got a taste of that last night with earnings. Palantir now the best performing stock in the S&P 500 right now, hitting new record highs. The company reporting strong results and guidance fueled by what it calls untamed organic growth in demand for its AI products. That said, our next guest isn't convinced. Jefferies analyst Brent Thill joins us now. He's got an underperform rating on Palantir, did raise price target to 60 from 28. Brent, why are you sticking with underperform on this name?
Kudos to Palantir on the fundamentals, Sarah, but in the last 20 years in software, there's no name that's ever sustained this multiple. It trades over 55 times revenue, even if growth accelerated. Again, this company's growing 30%. It's not like it's growing 50 to 100. They're growing 30. And if you think about other stories that's got to these multiples, they didn't sustain, and growth at some point faded. And when that happens, the multiple implodes. So ultimately, it's not necessarily a call on Palantir. I think our view is we run a balanced portfolio and we like other names. You can buy Meta at 25 times earnings, not revenue, earnings, and get an amazing return and play the AI theme through Meta. You can own Google at 12 times EBITDA. You can own Microsoft at 25 times earnings. So effectively, our client base is more valuation sensitive. I've gotten 3 emails from institutional investors on this name. It's owned by mainly retail and the insiders of Palantir. So yes, is there an opportunity for institutional investors to own this at some point? Is that the next catalyst for the stock? Maybe. But ultimately, I go back to right now, the names that our clients are owning are names where they can have support and valuation. So I'm not against owning some of these higher flyers. But again, I think it has to be a lower percentage of your portfolio because ultimately we've seen this movie before and it does not end well on multiples.
But shouldn't we talk about why it's such a high flyer and the fundamentals of the business, which, okay, you mentioned the 30% growth. My question on Palantir is anyone else doing what they're doing in terms of the AI services they're offering, primarily to the U.S. government, which are now they're scaling across enterprise? And you heard from Alex Karp what the demand looks like.
Yeah, I mean, look, they have a unique solution from the application to the infrastructure. It is no doubt a unique story in that sense. The question is, again, how broad is this? And again, there's a lot of vendors that have AI solutions and AI infrastructure. So there's other ways to play this AI theme. It's not just Palantir. You can't listen to him and say, oh, he's the only game in town. That's not true. There's a lot of other games in town. So if you look at AI infrastructure, right, you've got Amazon, Microsoft, Snowflake. There's a number of assets you can own. Yes, if you wanted to complete a Palantir-like solution, you'd effectively have to take multiple solutions and stitch them together. So we believe Dr. Karp on that view. So we're not challenging the fundamentals. What we're trying to do is separate the fundamentals from the valuation. And again, those are important to do. I've been burned so many times in the past by sticking with, hey, it can keep running on the multiple. Now the multiple today is 55 times next year's number on revenue, not earnings, not on EBITDA, on revenue.
Yeah, 55 years worth of revenues is rich, to say the least. Listen, Brent, I applaud your willingness to sort of call it out. That said, I mean, they are accelerating in terms of their growth rate, 64% now for the commercial business. Investors always like that. And I can go back to the mid to late 90s as well. Yahoo, yeah, wouldn't have wanted to own it at 50 times revenues. I think it traded there, maybe even more. But Amazon I would have, because, a lot of people didn't necessarily recognize the full opportunity. So just give me your sense there.
Yeah, I mean, look, we all do TAM analysis, but now that the market cap's over 200 billion, you look at a company like CrowdStrike, where half of their it's got less than half the market cap, is growing mid-20s to 30%, and has good margins, and you don't have to pay. You can pay a fraction of the multiple. So I guess my point is, it's okay to own a piece of this, but my point is, we think there's higher conviction stories where I sleep at night not worrying about where the multiple is at. And ultimately, everyone's painting this big TAM picture. Look, if we did this across the rest of software and anyone in AI, we'd have multiples that are unsustainable for the industry. And so, again, I think we saw Snowflake get to 50 times revenue. We saw Datadog get to these multiples, and those multiples ultimately corrected. They went from 50 to less than 10. And so, again, I think that growth isn't going to slow in the short term. But again, I think investors are acting like this is a company that's growing 50% on the top line. They're growing 30, and they guided to 30. And maybe they can accelerate that growth this year. And so we're not disputing, again, the fundamentals. It's just the valuation is beyond anything we've seen. And it's basically 2 to 3 times more expensive than the next single expensive stock in software. So there's another cohort of companies like Samsara, Snowflake. You go through the list, there's a lot of great companies where investors can make good returns, where you're not exposing yourself to that level of multiple. Right. And again, I go back to David, the institutional investor community, they're not involved.
Yep.
They're not. And effectively, this is a retail, this has been fueled by a lot of the retail side of the house. And you can hear this company doesn't really talk to investors. They don't go to conferences. They don't return emails from institutional investors, but they will sit and compliment the retail investor all day long. And so I go back to, like, our client base are institutional investors.
I get it.
And
I get it. Charismatic CEO, memification to a certain extent, but it's working, Brent. We'll have to continue the conversation.
I was wrong.
He also really doesn't like short sellers and has called them drug addicts, the other class of shareholders.
Yeah. Well.
All right, thank you, Brent. Brent Thill with Palantir up 25% and now 516% over the past 12 months. We are watching shares of PVH. This is the retailer owner of Calvin Klein, Tommy Hilfiger. It was placed overnight on China's unreliable entity list, putting the company at risk of sanctions. This was in response to the tariff increases from the U.S. PVH just out with a statement to us. We are surprised and deeply disappointed to learn of the decision from the Chinese Ministry of Commerce. In our 20 years of operating in China and proudly serving our consumers, as a matter of policy, PVH maintains strict compliance with all relevant laws and regulations and operates in line with established industry standards and practices. We will continue our engagement with relevant authorities and look forward to a positive resolution. An evolving story will continue to follow. Also, we're going to talk more about which retailers are preparing for tariff uncertainty and could get hit by this latest round in China, and what it means for prices that American consumers pay. That's next.
Supply.
Getting some breaking news from Washington this morning on the nomination of RFK Jr. Let's get to Emily Wilkins. Hey, Emily.
Hey, Carl. Well, yes, RFK has cleared the first major hurdle, just getting full approval from all the Republicans on the Senate Finance Committee. That means that his nomination will now be going to the Senate floor for a vote for the entire Senate. We saw that this was very much done on partisan lines. All Republicans voted for, all Democrats voted against. Democrats, of course, raising concerns about health care for Americans, about some of RFK's previous stances on vaccines. But you've seen Republicans really get in line behind him, and that includes Senator Bill Cassidy, Republican from Louisiana, and himself a doctor. And he was seen as one of the big swing votes, but he tweeted out just before the vote that he's had extensive conversations with the Trump administration, that his concerns have been taken care of and addressed, and he expects to see some serious policy coming from the White House. Also said he looks forward to working on issues they agree, like healthy foods and a pro-American agenda. Guys?
So we're going to watch this floor vote now, Emily. Is he going to get the Senate votes? And which senators are you watching? And also, you know, when Nicole Shanahan comes in and threatens to personally fund primary challengers against the senators who don't vote for RFK Jr., do those kind of threats matter?
Sarah, to a certain extent, I think they do. I mean, the way that our current political system is set up, primary challenges are some of the biggest threats that these lawmakers are going to face. And so, yes, it does matter, especially for, you see Tom Tillis right there on the screen. I mean, he's up for re-election in just 2 years. That means he's going to have to face a primary pretty quickly coming up here. As far as senators to watch, though, I mean, there are a number who have some buffer, right? Your Susan Collins, your Lisa Murkowski's, your senators from purple states, where they do have some cover from independent voters and Biden voters as well. And then folks like Mitch McConnell, who we expect to be retiring at the end of his term and don't have to face a primary again. I will say, though, a lot of eyes were on Bill Cassidy for this one because he flipped to a yes. I think this makes it way more likely that on the Senate floor, we are going to see RFK get confirmed, even if we may see 1 or 2 Republicans go ahead and vote against him. But we'll be keeping, obviously, a very, very close eye on this one.
All right, that was a good tell. Thank you, Emily. Emily Wilkins. Retail, one of the most exposed sectors when it comes to tariffs. Courtney Reagan here with more on the potential impact, Courtney, and how these companies are preparing. It's not like it's too big of a shock.
No, it's not too big of a shock, but obviously the target is moving with percentages and timing. So you know that sourcing is held really close for a lot of retailers, but the details really do matter for tariff risk. Though at this point, most analysts say the risk is manageable if there's no universal tariff. So diversification away from China began really before the first Trump administration's tariffs. Ironically, some nearshored to Mexico. Now, the share of shoes imported from China has fallen from more than 55% in 2017 to about 42% in 2021. That's the latest years we have data for from the government. At the same time, footwear imports from Mexico have risen to 2.1% from 1.6%, according to the U.S. International Trade Commission. So small, but higher. Now, in 2013, almost 38% of apparel that was sold in the United States was imported from China. 10 years later, in 2023, it was just a little more than 21%, most of it, though, shifting to other Asian countries, not Mexico or Canada. However, more than 20% of denim sold in the U.S. is sourced from Mexico, according to the American Apparel and Footwear Association. This is where you have to do your homework. Levi Strauss, CFO, says its sourcing from China and Mexico is immaterial. ANF's Mexico sourcing, immaterial as well. Though Contour Brands, maker of Lee, Wrangler, and other denim brands, does have 38 factories in Mexico. Now, unfortunately, Best Buy's 2 biggest countries for sourcing product are China and Canada. 30% of Boot Barn products are made in China, 25% more from Mexico, and around half of Steve Madden's sales are products imported from China or Mexico. They are looking to reduce that risk. A significant amount of Canada Goose's production is in Canada, but that's a premium product. So even if tariffs get passed through in prices, it likely won't impact demand too much on those big puffy coats. Sarah?
Vietnam, 4th biggest trade deficit that I highlighted this morning. So that would be a big problem if he eyes there next. Thank you, Courtney.
Very much so.
Yeah, Courtney Reagan, good rundown there of the tariff risk. After a break, Elon Musk's growing influence as he slashes his way through the U.S. government, plus President Trump ordering the creation of a sovereign wealth fund. We'll talk about the implications, especially for big tech, when we're back in a moment.
now and make it count.
Welcome back to Squawk on the Street. I'm Silvana Henao with your CNBC News update. President Trump will meet today at the White House with Israeli Prime Minister Benjamin Netanyahu. The Israeli PM will be the first foreign leader to come to Washington during the president's second term. A White House official says the two will discuss the second phase of Israel's ceasefire deal with Hamas and President Trump's commitment to freeing all Israeli hostages in Gaza. Swedish police say 5 people were shot at an adult education school in central Sweden this morning. The extent of the victims' injuries is not clear yet. Local media are reporting the shooter is dead. And Grubhub confirmed today customer and driver data was compromised in a recent security breach. The food delivery app says hackers accessed hash passwords and partial credit card details along with names, email addresses, and phone numbers. The company has not said yet how many people were affected or when the breach happened. David?
Savannah, thank you. Well, we're just 2 weeks into the Trump presidency, and Elon Musk, he is moving with his typical lightning speed to try and shrink the size of the federal government, raising some concerns, of course, about oversight. Treasury Secretary Bessent reportedly telling lawmakers that DOGE, that's, of course, the unit that Musk controls, does not control the Treasury's payment system. Reports to the contrary notwithstanding. Meanwhile, President Trump orders the creation of a sovereign wealth fund within the next year, saying it could potentially buy TikTok. Joining us to talk about it all is Elevation Partners founder. He's an early tech investor, of course, frequent contributor to the program, Roger McNamee. Want to start off on Musk? I'm sure you have some thoughts about Elon and what he's doing.
Well, David, I don't think we've ever seen anything remotely like this before. The Treasury payment system, which is the largest of the things that he is attempting to manipulate, that's a system with code that's as old as 75 years. And it's really delicate. There's a lot of interoperating pieces that cover all the payments of the government and roughly a third of the payments of the entire economy. This is not something that you can just tinker with. And it's not something where you can send in, as Wired has reported, 5 or 6 kids fresh out of college or even fresh out of high school who are great programmers to go and look at it and then make any kind of changes without causing unexpected consequences that might be catastrophic. So the hypothesis which Wired and others have suggested is that the goal here is not actually to reduce government spending by a thoughtful analysis, but rather to reduce it by just crashing the systems. And that's obviously a really, really bad thing to do without a lot of preparation. And, I don't want to pretend like I'm the one who understands exactly the details of what's going on here. But if I were an investor looking at this, it's really hard to see a happy ending for investors coming out of this.
Yeah, although Elon Musk, to state the obvious, is unique when in the business world, certainly the extent that I'm familiar with him. Nobody seems to move quite as quickly and potentially as aggressively and or with more effect than Elon Musk when you look at what he's been able to accomplish, Roger. And so it does seem to be that he's taking that approach in the U.S. government as well.
Yeah, but David, I think that's the key distinction is this is not a business. This is the federal government of the largest economy in the world. And it's not just something where you can move a bit here and a bit there and know what you're going to get out of. It's an incredibly complicated, incredibly old system. I assume it's very fragile. There are very few people who understand the ins and outs. And for certain, the people coming in with Musk are not among the group of people who understand the details. And as far as I can tell, they're not interested in working with the people who do understand it. They're just going to go in and mess with it. And again, the unforeseen consequence of this could be far-reaching.
But first of all, but do you not support his effort to try to increase accountability and transparency in government and make sure our taxpayer dollars are not being used for waste and being hemorrhaged, and open this whole process up and try to save the U.S. a lot of money in the process? Do you not? I don't
believe for a minute that that's what he's trying to do. I don't believe for a minute that's what.
What do you think he's trying to do?
I think this is purely self-interested. I think that what you're looking at is a group of people who are taking a tactic that they've used successfully in the business world and applying it to the largest government in the world with the largest number of tax dollars and the largest number of disbursements. And we don't know exactly how this is going to turn out, but the notion that this is going to lead our government to either be more efficient or wiser in the way it disperses things, I think is unlikely. And I wouldn't go to sleep tonight assuming that tomorrow morning that things are going to be better.
I mean, two things can be true at the same time, Roger. He might end up better off, or his long-term goal of getting to Mars might be furthered, and the government might also get more efficient, don't you think?
Well, I think he's for sure committed to his own goals. Whether there's any commitment to making the government more efficient, I find unlikely, particularly given that this is not how you would do it. If you want to make the government more efficient, you have to look at the political process. You have to recognize that the incentives of our political process have been, for the last roughly 40 years, to support the interests of business at the expense of the average voter. And I think if you want to make things more efficient, you probably look at that and change the way things are allocated. I don't see any indication that that's what they're doing. And from where I sit, again, when you have a system as complex as the U.S. government, you should be really careful and thoughtful about when you make changes. And there's no evidence that that's what they're doing. This is a shock and awe thing, just like what he did at Twitter. And to be blunt, what he did at Twitter didn't make Twitter a better platform. It made it a better platform for him, for his political interests. And I expect the outcome we get here may be like that, but it might just be catastrophic across a really wide range of things. And, for what?
Roger, finally, we mentioned the Sovereign Wealth Fund. Obviously, there's TikTok still out there. The clock is ticking in terms of figuring out an outcome there. Any thoughts in terms of whether the U.S. needs a sovereign wealth fund?
Well, there are lots of points of view on that. I personally do not have one. The one notion I would put forward is that if the government is going to become an active investor, you need to have really, really good governance to make sure that that's done in an appropriate way. And we'll have to see what terms they put forward on it. The U.S. as a country historically has not gone that way. It has typically separated the government's interest from business interests. For example, when the government paid for the vaccines that fought against COVID, it didn't take a huge share of the profits from that. And what we're talking about doing here is doing that. And that I can imagine cases where that's a really good idea. And if that's what they do, well, that will be very interesting. But again, let's just see what they say.
Yep. All right. Roger, thank you. Always appreciate it.
My pleasure.
When we come back, shares of spirits maker Diageo hitting the lowest level in years. We'll talk about why and what tariffs could mean for profits. Back in 2.
NBC.
Amazon is gearing up to report a big quarterly number this week. That stock is already up 40% in the past year, and one chart watcher says shares still have room to run. She'll give us her strategy for trading that online giant. Tune into our Market Navigator segment later on today on Power Lunch 2.
Small cap assistant.
Shares of Diageo falling to their lowest levels since 2020 after pulling their medium-term guidance. They do cite the prospect of tariffs. Our Brandon Gomez is here with more on how this tariff threat might impact the sector as some corporates' visibility, Brandon, is now limited.
Hey, Carl. Yeah, absolutely. Yesterday was all about Mexico and Canada. Those tariffs delayed at least a month. Diageo, though, on its earnings call, still citing tariffs for weak performance. Roughly half of Diageo's U.S. sales coming from imports from Mexico and Canada. The company remaining cautious around EU tariffs on American whiskey, too. Those go back into effect on March 31st. But it's not just Diageo. Constellation Brands cut guidance earlier this year. It could see tariffs hit operating income by over 30%, some analysts estimate. So what do the next 30 days of negotiation actually look like for the spirits industry? Well, the president of one Kentucky-based distillery on Squawk Box this morning saying he expects an uptick in orders.
Especially with the 30-day suspension of the American tariffs on Mexican products and on Canadian products, I think you're going to see a lot more stocking up.
Now, the question is, will stockpiled supply make it to shelves? 3 Canadian provinces already started removing American labels yesterday in retaliation. Today, bottles are supposed to go back on shelves, but the Premier of British Columbia saying there's no huge rush to restock. And I'd remind our viewers, too, it's not just Jack Daniels and Jim Beam. This is a big private investment space. George Clooney's Casamigos, he sold to Diageo in 2017. Dwayne Johnson's Terramana. Matthew McConaughey has his Kentucky Bourbon. Even Snoop Dogg and Martha Stewart's wine, 19 Crimes. Experts telling me on the phone the industry is far less capable of absorbing costs, and consumers should be on the lookout for price hikes as we go throughout the year, Carl.
Brandon, it comes at a tricky time for the industry where people are drinking less alcohol, right? So it does raise the question as how much pricing power these companies have if they're going to have to raise prices on tariffs.
And I was talking to a lot of the wholesalers as well, the wholesalers industry. They were saying that's what makes this time different than 2019 when the alcohol companies were able to perhaps absorb the cost, not raise prices. That's not necessarily going to be the case this time around because of that depletion in consumer appetite for these products.
Well, we were wondering when some of this guidance would get cloudier. This is a good example. Brandon, appreciate that. Brandon Gomez, we'll talk soon. A lot more Squawk on the Street continues after this break.
Patriots.com.
Welcome back. Keeping an eye on shares of both Merck and Pfizer, both of which reported numbers. Merck, that's a decline, the likes of which has not been seen since, I believe, 2008, which it did suffer a more significant decline, although obviously the day is not over. Much of it having to do with its decision to take what they call a new approach and temporarily pause shipments to China beginning this month and at least through the middle of the year of Gardasil, their vaccine for the HPV. They say they're taking the action now will facilitate a more rapid reduction of inventory, help support the financial position of an important and valued partner. And they do believe China still represents a significant long-term opportunity for Gardasil, given the large number of females and even males who are available conceivably for the vaccine. That said, the guidance wrapped up in that is not being well received by investors. Pfizer, for its part, reaffirmed all components of full year 2025 financial guidance. That included revenues in a range of $61 to $64 billion, adjusted diluted EPS in a range of $2.80 to $3. You can see stock is hanging in there, perhaps giving up a bit. Of course, the RFK Jr. likely, I guess, Sarah, confirmation may not be good for either one of them, and that may be why we saw Pfizer shares were sort of flat on the session.
Like you saw Moderna intraday is a telling chart.
Yeah. So if he gets approved and
he passed a key vote in Senate Finance this hour. He got
Senator
Cassidy's vote, Republican.
Right. We heard
key
Emily
on that.
Wilkins talking about that. So
She
I
was
guess
saying
the
that was a good
concern
tell.
rising for those who are, obviously derive a decent amount of revenues from various vaccines.
The food makers are under pressure too, not necessarily because of that, but PepsiCo, the North American guidance, which Ramon LaGuardia told me was conservative, but still that's been an overhang on the sector if he's going to go after things like artificial ingredients and dyes and more
He kind of dialed that back in his testimony, said, I'm not going to take away your Diet Coke.
Yeah, because my boss likes it.
Yes,
he said.
exactly right.
Still, they're all getting hit. Clorox and Estee Lauder not helping either, both on earnings.
Yeah, a lot more to get to as well in the next hour. Quick programming note, we're going to get to Google results as well in just a few hours from now. The stock, of course, has been one of just 3 Mag 7 names that's held on to gains for the year. And you're going to want to tune in with us tomorrow for a breakdown of how those earnings look. Live market coverage coming your way right after this.